TGIF Eagles, welcome to FACE. Hope everyone had a great week. For some, it was a very difficult and trying week. I don't think anyone in our community was surprised by this decline in equities and indexes. You know, we've been warning about it. We started giving signals last week. I said I was bearish Russell so many times. I'm going to go out and get a Russell Terrier. And look how difficult it is for people trying to trade here. BOE cleaned out all the shorts. Okay, looked like we had a breakout. So all the cable bulls got excited again, and now all their stops to the downside have been taken out. New lows here. If you've been trading EG, that's been just as schizophrenic, very difficult trade. But I just want to review what happened here in this room during the week. Hi, Patrick. How are you? Thank you for your loyalty and for your greeting every day. I look at it and it's like, I know you. Maybe we'll meet one day. So to start off the week, of course, we had the big sell-off in the S&Ps. And then Blake on Tuesday showed all the confluence here, along with the 200-day. There were fibs. There were all kinds of things. And he said, we will rally today. And said that we'll rally back to about 2,700. So in this environment, it went above 2,700. So nailed the range. Not sure if he traded it. And then yesterday, the sell-off began again in earnest. I thought that we might get some type of ABC, A, B. It's still possible. One thing I'm trying to discern is whether or not with 24-hour trading, for example, the ETFs don't show this tail right here, because this was overnight trading, and by the time we were opening the next day on Tuesday, maybe we were here. So it showed the low holding, and this is new lows, but if you take into account Monday night, it's not new lows. So I actually thought that we'd get an A, B. This was about 200 handles here, maybe 190. There's still a probability, unless we crash today, that we could still get that, but it's a little deeper. It's over 61.8. I think we're about 78.6 back if you take this into account. So I'm doing nothing. If it crashes from here, it goes without me. Although if we, by some chance, I don't know what a catalyst could be to turn this market on a Friday, who wants to go home long after a week like this, right? But should it happen, if we had equality and we got another 200 here, or 190, would take it back up towards 2750-ish. That would be an aggressive sell for me. If that happens, people think the coast is clear. They survived these two declines. Now I want to move on to the commentary by the FACE team and the dollar. So Blake came in here at about 24.30, said, you know, it's just negative, and I'm short, and I was short the night before for 30 pips, but he gave all the technical reasons for decline, accurate. He was right there for that. So that was called live in the room. People that just are followers probably took that trade. Right, Steve Volge's been short Aussie forever. I don't know if he's covering now, but Steve was short up here at the top, added on up here, has been riding it down, taking partial profits. Talked about the short Aussie a million times over the past couple of weeks. We were also right about crude, although it extended a little bit higher than we thought it was going to. We were looking for sub 60. In fact, I did an interview when it was 66, said I thought we'd see 55. I'm looking for 58 here. So this was another winning call if you're a crude trader. So my point being that just in the free room, just this week, it's one thing to be right, but do you know how many people were on the other side of being long crude? trying to bottom pick euro. Long S&Ps, buying the break because it's been instilled in them for 10 years now. Buy the dip, buy the dip. Everyone's seen that cartoon where there are robots doing it. So a lot of people have come up and, you know, tweeted to me, thank you, and thank you through messages to ForexAnalytix. We live in a world where money is where the rubber meets the road. In my opinion, the best way to say thank you if you're not a subscriber is to sign up after an excellent week of keeping everyone out of trouble that's listening to our voices, and also being right about some opportunities in the market here all week long. And I would say that it's not unusual that in fact, it happens quite often that there's excellent analysis that you could take advantage of every day. So the way to support us is to become part of our FX family. I've already listed all the advantages besides the great website, right? And the traffic light page and the educational links and the fact that you have all these different analysts working for you 24/6. The mobile app, so you could go about your business and you'll know that if we reach an area, Blake or Steve's going to push an alert out. But to have all these great analysts here, Amanda in the room, is quite a value. So if you had a great week, now it's the time to act, to say thank you to ForexAnalytix and become part of our family. So we'll see what happens on a Friday. I usually don't call out any trades on a Friday. I'm just looking for setups going into next week. And I'm kind of on Greg's side, thinking that until the dollar could close above 91, that there's still a chance we might even be peaking here for another decline. I think if that happens, that will support commodity prices and the equities. So stalking dollar shorts, I think euro should lead it to the upside. And I want to thank everyone that comes here every day. For some people, it's late, you know, in Asia, you're burning the midnight oil. In Europe, you've been trading all day. Here, the sun hasn't even, you know, if you're on the West Coast like me, you're up like a farmer before the rooster crows. You're already staring at your platform. So, who had a great week in face? Give me a Y. Hi, Nitish. You have a good week? All right, that's great. Okay, Nitish, great. Thumbs up, Patrick, good. All right, so I'm going to pass it over to the team. You want to stick around for a great guest today, Kiana Denal. I don't know if you guys know of her. Her handle is @InvestDiva. And let me tell you, she is a diva. And she's a very talented trader, and she's going to join us at the top of the hour. So stick around for Kiana. And I'm going to be honest with you right now. I don't know what to do. I don't do things on Friday. I have a lot of I don't knows, and my biases are going into the next several days looking for shorts in the dollar, thinking that this low at 88.50 will be taken out. So just a hunch right now. How you doing, Blake?
Good. Good morning, Dale. How are you?
How are you, buddy? Nice article in Business Insider by Blake if you want to, you know, get the narrative of what Blake is thinking here with equities and the dollar. Check it out.
Yeah, I mean, it's thank you very much. It was I had fun with the article. It was kind of more of joking around ish kind of thing, but in all seriousness, you know, it's trying to figure out why the dollar's where it's at and what's going to move it in the future. So I think if you guys if you listen here normally, you probably you probably have a pretty good idea of why, you know, I feel the way that I do and why I'm looking at what I'm looking at. But I'll tell you, overall, hold on really quick. I'm just had to add to something. Overall, you know, the dollar is in a tricky spot, and let me go ahead and take the charts here from you. Let me grab it really quick. Whoops, I gave you guys everything. Hold on, sorry, hold on. You guys don't need to see all that crap. How do I do that? Here we go. Okay, there we go. Okay, so if you guys want to see how my setup is, there you go. You saw it on my main computer anyway. So here's the euro dollar, and you know, the euro dollar it's a little tricky of a trade right now, which is the reason why I'm not trading the euro at the moment, because the euro is currently being propped up by the fall in the pound. And I know you might go, well, what do you mean by the fall in the pound? It's actually a really big rally in the euro pound that's keeping the euro bid at the moment. But the euro dollar, it's a little bit tricky, as I've mentioned to you guys before. I'm looking for, you know, the reaction at 122. This is this uptrend line, really this you know, this low over here, which comes in at 121.60. This whole area is going to be very important for the market, and I don't really want to be super aggressive at this stage in the game. Hold on one second. I don't want to be super aggressive at this moment. In the euro, because I don't know exactly which way we're going to go here. However, the one point that I made in the article is that I wrote in Business Insider yesterday, and it's on our website too. If you go over to our blog post, or our blog area of our site, is that the U.S. dollar is finding support as stocks sell off, and it's also pulling back as stocks rally. So you want to see pretty good evidence just from the last 10 minutes. Here, take a look at this. Okay. Here's a 5-minute chart of the S&P, and let's compare it with a 5-minute chart of the dollar index. Unsupported resolution for. Let's delete that, and let's go compare.
Yeah, I've been thinking that the, you know, a firm dollar, stronger dollar is a headwind for the market. And
you can see almost this is intraday, and it's almost mirror images now. You know, it's getting that way, and we're starting to see that correlation. And you know, the point I'm trying to make here in the blog is that the fact that the stock market, you know, when it sells off, people are getting a little nervous, and when they get nervous, they're not saying, hey, let's, you know, I'm nervous, put me back into the cable, or oh, I'm getting a little nervous, put me back into the yen. Well, actually, they are buying yen, but they're really, you know, starting to buy dollars here. That signals to me that the market's a little nervous. So you know, is that going to be ultimately what puts a bottom in the dollar? I don't know. I'm having, and I still struggle with finding the reason why I need to be buying the dollar right now. Okay, but if the market continues to sell off, let's consider the Dow's down like 5.5% this week. If the Dow continues to sell off, are you going to get into a situation where people go, you know what, I don't want to be in stocks this week, I'm done, get me out. And if they start selling the stock market more aggressively, let's say going into today, will the dollar respond where people start buying the dollar? And my initial gut instinct is, yeah, they probably will. And so that's where the dollar comes into play. Now, you look at the pound. By the way, the pound got hit overnight on the comments from Barnier this morning. He says Brexit transition not a given if disagreements persist, and it says Irish solution must be unambiguous. And so you can read this here. Here's this. EU chief negotiator Michael Barnier briefs reporters on Friday as a week Brexit talks winds up. On the agenda for Friday was an update from the UK on the future relationship. Basically there's still a lot to be done, and so the pound got really hit on this news, and we actually got slammed right into the 618 retracement. Now, if you use ForexAnalytix, okay, the analysis from this morning was this: the pound US dollar is testing support at the 138.30 level and close to 138. The figure is recent 618 retracement. Pound has come off regarding some Brexit news, which is pushing both higher lower. But we noted that, hey, this is the 618. Whenever you get to a 618, it's very, I respect this number. So the hell if I was going to be short the cable going into the 618. But what I do know is it's a very important level, because that was the breakdown point on the night of Brexit. That was the breakdown point right there, okay? And that is an important level that we knocked our head up against on the squeeze higher, and it's an important level on the way back down. So you guys should be very cognizant of this 138. If the pound breaks through 138 cleanly, that is probably not going to be good. We will probably see the lower end of this channel here, which may take us down to 135, and that I think is a possibility, and that's why you guys have to be a little careful here if you're trading the cable. I don't have any exposure in the pound right now, but I shorted the pound yen overnight because and by the way, let me explain this really quick. I put in this pound yen pattern in play because let me show you guys what happened here. This is a false breakout, breakdown overnight, and so I actually shorted the pound yen overnight at 152.08, I think is where I shorted it, and then I didn't make very much. I made a few pips coming back down again, but not till when it dropped all the way to 150. But I already got out. This pattern in play targets 146.35. That doesn't mean I'm going to stay short until it gets to 146.35, which is right here, the 161% extension right here. That doesn't mean I'm going to stay short until we get there, but I will be targeting it to the short side and trading it, short as often as I can whenever I can find good entries. I knew that 150 was going to be pretty key support, so I wanted to see the reaction off of there. But these patterns in play for those of you that use them, I think that you should use them as more of a guidance. Like, okay, Blake's bearish the pound yen because of the ascending wedge break, so he's eventually targeting 146.35. How do I factor that into what I'm doing in the market versus just straight up shorting the pound yen and just staying short? Some people do that. But for me, I'm pretty active in the market, so I tend to trade around what I'm seeing here and how I'm feeling about a particular move. So anyway, that's the pound yen, and remember that the pound is really testing some key support. Now Steve is going to be taking over here in just a few minutes. So what I want to do is I want to cover the Canadian. So we have Canadian employment. That's the big data for today. Okay, and I'm going to talk about a couple of Canadian pairs really quick. But first of all, the U.S. dollar Canadian, we played this this move out. This is a week and a half ago. or 2 weeks ago, bought the US dollar Canadian, or was it last Friday? Actually, it was last Thursday or last Friday. 5.2. When was that? 5.2. Oh, so it was a week ago. It was last Friday. Okay, so last Friday we broke out of the descending wedge and we rallied sharply. I figured we were going up to a 38% retracement, but man, we've really climbed quite substantially in the dollar Canadian. Now, what we're doing currently we're testing the previous support that's acting as current resistance. You notice how we're nudging right up against that resistance ahead of Canadian data. Why is that so important? Well, it's so important because if we break through this 126.25, then we have this, big downtrend line that comes into play around 127.20. Now, Canadian data. Let's go ahead, and I'm just going to grab Forex Factory because it's easy to watch, or easy to look at for the basic data. I look at different calendars for all the economic data globally, like what happened in Norway overnight. I look at Bloomberg, and but this is good for most of you guys that trade, the majors. It's easy to view. It's easy to understand. Okay, so we have Canadian data, and Canadian data. Just if you guys can see this here, we've blown away expectations for the last 2 readings in a row. Blew them away. Canada has just been posting some pretty spectacular jobs numbers. Now, Dale, I'm going to ask you this question. Are you listening in? I know sometimes you go on mute and you're not. Can you hear me? Right there. Yeah, he's not even listening. Okay.
I am.
Oh, you are. Okay. You had it on mute. Okay, so look at these two. Look at these two. And actually, you could say really, it's like the job creations out of Canada for the last 6, 7, 8 months been really strong. They've been great. So, do you think there's an expectation of a possible miss here?
There's always, everything and anything can happen, but I would say that people are probably expecting a continuation, so a miss would be a pretty big surprise. Okay, yeah. So yeah, you're showing examples. So people, the examples that you showed, they just had one great month followed by a miss, but having 2 great months in a row, that would really be a surprise, Blake, in my opinion.
Yeah, so we have 2 great months in a row of blowout. Now blowout, and so I'm assuming there's going to be some revisions and some, and that's, the economists are also believing that, hey, Canada's going to create some jobs, but I think the risk is that we maybe lose a few jobs. Now, is Canada going to lose 50,000 jobs? No, probably not. But
well, but you know what? It's a good point. They're a natural resource country, right? And natural resources have been under pressure. Plus, one of the engines in Canada has been the real estate market, which recently has peaked in Toronto. It's been coming down pretty good. So maybe there's a few more unemployed realtors, mortgage brokers, oil rig drillers, and miners. Yeah. So, it hasn't been a great environment for Canada being a natural resource country.
Well, has it or hasn't? I'm not too sure. I mean, I'm going to try not to guess that, but just looking at previous these, this has been some really strong data out of Canada. I would not be surprised. And you look, we haven't lost jobs in Canada since like September or August of 2016. Okay, so a year and a half, Canada has just been posting, good data after good data after good data after good data, knockout numbers. But like most economies, like even here, job creation is starting to. We're getting to a point where it's full employment, or near full employment, and still very steady. but are these numbers a little bit too exaggerated? I think the risk is that we actually, you know, come in slightly below expectations, would be my guess. Now, the reason why I bring that up is because if we do miss, we are going to blast right through this resistance. The flip side is if Canada puts up another great number, like let's say Canada creates 40,000 jobs, which is, you know, it's like us creating, you know, 300,000 jobs. I mean, those are good numbers. If Canada, I think the multiple is by 7 roughly population wise. Anyway, if Canada creates a lot of jobs, maybe and beats expectations, this is also a good backstop for a short. I mean, you could literally short the U.S. dollar Canadian, put your stops above the highs and walk away and say, okay, well then, you know, here we go. I got a good risk reward, you know, set up for a short. Flip side is, you know, the thing's nudged right up against resistance. To me, it looks like it wants to squeeze, you know, up towards this trend line. So, and you know, with market becoming a little bit more risk off, people tend to sell the Canadian dollars. They sell commodity currencies. They sell emerging market currencies. They, you know, those tend to be the ones that feel the pressure first. Also, okay, and then I'm going to pass it over to Steve. One of the other things that you guys may not have seen is, and I posted it on Twitter yesterday late in the day because I was doing analysis for ForexAnalytix, and I'm like, whoa, this is a big double top right here. This is the Canadian yen, and it's, you know, very, very vulnerable at this point. If the numbers do come in weak, this Canadian yen, in my opinion, is a good short. If the numbers come in weak, because stocks are already weak, which is giving the yen a boost, and if the Canadian numbers are a miss, then we're probably heading down towards the lower 80s, 80 yen level over the course the next, you know, several weeks, couple months, whatever it's going to take us to get down there. But I think that opens up a lot of downside should we have a Canadian miss. So keep your eye on the Canadian yen if the Canadian jobs are weak. And with that being said, I've got 3 minutes to go get myself ready. So Steve, good morning, TGIF.
Hey, mate.
Hey,
Hey, everybody.
Put your loony hat on, Blake.
Hey, what's that?
Put your loony hat on.
I'm gonna put on my loony hat. But hey, I'm passing it over to you guys. Good luck for the Canadian.
Good hunting, buddy.
Thanks, Steve. And Steve, you know, happy Friday to you, and TGIF to Stelios and whoever else is logged in right now. So you guys have a great one.
Me, say my name.
Of course, Dale. All right, see you guys.
All right.
Bye-bye.
Hey, Stevie, how you doing? No, Sir
How
Bulgy.
have you been?
Good, man. You're a little soft.
I am?
Yeah.
Let me see.
It must be the usual problem with your mic auto volume thing.
Hi, Stel. How are you?
Let's see now if it's going to be fixed. It should usually auto adjust
I'm
like
good.
within.
It's
Hey,
better.
guys,
It's better.
you
It's
know,
better.
I have a fairly firm date for Jim Rickards, the death of the dollar guy in May.
Man, that's going to be amazing. I'm a huge fan.
Yeah, that's going to be fun to talk to him.
Of the death of the dollar, Stelio,
I
or of the guy?
could grill him on it. I could grill him on it. He said the ATMs wouldn't work, so we'll see.
Well done, Dale.
All right.
That's really great. Well done.
All right. Thank you, man. So Steve.
Okay, so before we go over, of course, you know, covering. Blake already covered a lot of ground, but obviously we have things to show. But obviously, let's give it 1 minute and see what Canadian data we get. Blake already showed both the USDCAD and the CAD yen. As he said, CAD yen seems to be breaking below a support that in actuality triggers a double top formation, and here it is.
Hey, Steve, before you really get rolling, you know, I think it's important that I acknowledge your great trading, which you've shared with the community over the last 10 months, but especially the last couple of weeks, being short Aussie, thinking, and Stel thinking there could be a dollar bounce, and your warning about stock indexes, and even taking advantage of it yourself. So
Thank you, mate.
kudos to you, man. Congratulations.
Thank you, thank you.
Oh, that's really weak. Very weak numbers, man.
Yeah, and yeah, CAD GPY is plunging, and
What
USDCAD is flying. It's actually currently minus 88K versus expected 10K.
What a great guess, by the way. What a
What's
great
really
guess.
amazing, what's really amazing is that unemployment rate ticked up 0.1, but participation rate ticked down 0.3. So when participation rate ticks down, unemployment rate usually goes with it. But this time, it's like double
whammy. They both
whammy.
move in the same direction. Yeah, it's a double whammy.
Bad numbers all the way around.
Keep in mind though that the USDCAD, if you see here, is currently testing resistance. Why is it resistance? Because we were trapped for a period of time. It was like roughly, what was it, like 2.5 months, something like that, in a range. And
if you were long here, Steve, would you book something here? Take it off?
Absolutely.
Absolutely. Stop.
Absolutely. If I was long USDCAD, I would be booking half here. I don't know if you remember on Friday, this was the reversal we had from the NFPs when we were breaking above this descending wedge. I said that, listen, once we close above 124.20, in my opinion, there is very little that can hold the USDCAD from going up and retesting the 126.60 area. But that's going to be major resistance. So I absolutely would be booking half of it here. Absolutely. And you know something, you can always book half. And if you see a decent pullback, let's say back to 125.40, 125.50, you can add back the half you booked, right? But you know, personally, my trading style is anyhow scaling in and scaling out. And you know, I've gone past the part that I'm going to start, you know, telling myself, oh, you left profits on the table, etc. You know, I always make sure that I book profits at a very, very healthy reward to risk ratio. And since that's the case, I'm not going to be crying over, you know, lost profits after that, in all honesty, because you know it's something that you cannot avoid happen from time to time. And at least this way you also protect profit, because there are occasions that you might be in a good profit and you will end up giving it back all in the market. By the way, we do see a reaction here, as you see. It's coming off somewhat. Of course, that doesn't mean that we're going to go lower from here, but we do see an initial reaction from this zone, and you know we should definitely monitor very closely and see what kind of daily close we're going to get today, because obviously being on a resistance and after, you know, such a nice run, because we in essence have rallied 400 pips within a single week, right? So if you put that in context, that's quite a big move for the period of time it took to manifest. So market sometimes doesn't need like a macro trigger or whatever to just correct lower. It can simply do that for technical reasons like profit taking or whatever. You already see that we are like 40 pips off the highs within 5 minutes, right? So anyhow, we will revisit USDCAD, you know, a little bit later and see how it's progressing. Obviously the negative data keeps a good bit on it. Now I wanted to visit USD yen because this is one of the pairs I have been talking about recently. When we moved higher at 110.15, I said that, you know, this is a critical level to hold if we are to fulfill the head and shoulders formation targets. We did get rejected from there. And to me, this kind of price action now looks more like, a bearish consolidation before another move lower. So even if we rebound from here for a reason, I would not exclude the possibility of finding resistance once again there and then moving lower. Otherwise, if we just straightforward penetrate through there, keep in mind that 107.37 is both the is a level that has both the target of the head and shoulders formation, is also the previous low we saw there, So in essence, it's a level that can easily act as a magnet. We've seen that happening very often in the markets. Now, on the other hand, the DXY, as you see, is in a short-term consolidation. We're currently, yesterday we had a spinning top. Today, so far, we have an inside spinning top. This can easily prove to be a bullish consolidation for another thrust towards 91. Now, as I said yesterday, and I repeated it, in the conversation we had with Gregor, in my opinion, if we actually do squeeze above 91, if we actually do break above 191, we're going to squeeze out a lot of shorts, and this might trigger a snowball effect. So the dollar index obviously remains bearish despite rebounding from the exact area we were expecting. But if we break above 91, I think that the chances that this little corrective move will become a much larger one increase exponentially. Okay, so keep that in mind. Keep that in mind also.
If they're going to save the stock market from a crash, they need to take the dollar down. I think that's their instrument for circling the wagons in here to take the dollar down. Blake showed that correlation today, how the S&Ps are under pressure. And that's been my theory going for, for a while. So if we're going to save this market from taking out Monday night's lows in the next 48 hours, you need to turn in the dollar. I think that would give the market a relief rally. Just
absolutely,
my opinion.
Absolutely. Although, in the same essence, we have very recently got reminded of a lesson, which is that sometimes the market forces are too strong to be tamed. What happened with XIV, XIV, the inverse of the VIX, the inverse ETF of the VIX.
Yeah, we knew that was a landmine. And that's something else, Steve. We talked about the VIX trading well while the market was still blowing off. And I sure didn't see a lot of people talking about that. So again, you showed that chart every time the VIX was going up, with the market continuing to go up, that there were reactions. Kudos on a great timely chart. Not after the fact, like you hear on CNBC. Oh, now people are coming on and going, oh yeah, we were due for a correction. But a week ago, it was all, it was all green light ahead. So again, and I remember I said, well, God, your VIX chart says we should go to 25 or 30, the top of your wedge.
Yeah, and we went to 50 plus.
Right, yeah, so, and you kind of didn't want me to be that aggressive, and it went to 50. I know.
It went to 50 plus, yeah, that was an amazing spike, I have to admit. And something, we said it yesterday as well, that was a very nice rejection that we got yesterday. It was a very nice technical rejection, both from the Dow Jones. I showed that. I don't remember if I showed that on the webinar. I definitely showed it on the chat room yesterday, that the Dow Jones was testing the day before yesterday at the highs. It was retesting this broken ascending channel support as a resistance. It was also testing the 50 DMA. If you remember, I was very explicit at warning since the second day that we got a big sell-off. I said that keep in mind, people, at least for a short period of time, are going to be selling into moves higher in the market, simply because some have already been scared about what they see, and they've already started giving orders saying that, listen, get me out of this. I've already had a very hefty profit. I don't think I should be pushing my luck anymore. I think I should be at least protecting part of my portfolio, or reducing my long exposure somewhat. And so it's natural when you see such a brutal move it's like an earthquake, that after the big one you get like smaller ones, right? So even if the majority of the selling we're going to see in this move lower, let's say it proves to be just a corrective move lower before we push to new highs, it was a decently enough big earthquake to at least create several jitters and side effects, meaning that people are not going, I mean, they don't have the psychology to immediately push this to new highs. They will first need some time to be persuaded that the environment is safe again, that the water is warm again to put their feet in before they can actually push it to new highs. So no matter what they try to do, at the best case scenario, in my opinion, you should expect some kind of range trading with volatility remaining for recent data elevated, according to our recent data and our recent experience, and slowly volatility moving lower. So when the volatility starts contracting, and it contracts to a level that it makes the environment feel safe again, and whatever jitters have receded, if that happens, then we can see the market push to new highs again. But this is a process. This is not something that can happen within 2-3 days. That's why I kept saying also, looking into a correction since December, if you remember, because since late December I was looking for a big correction lower. I was saying that, listen, you can never time it exactly, but the adage that up with the escalator, down with the elevator is not there by accident. You might be moving higher, like constantly in a slow pace, but suddenly when you get a big correction lower, it's going to be brutal. So you're going to suddenly, as you saw here, retrace within a week the price action of several months. So it took you like a couple of months to creep higher and higher and higher and higher, with like consecutive records in breaking new highs to the RSI, to the weekly, to the monthly, to the daily, to DSI being at 97 and whatever else. And suddenly the fear greed index, by the way, was like at record highs, and suddenly fear and greed index is back at 8 with a minimum of 0 and a maximum at 100, and all that within a single week. So that's why you need to be careful when you're seeing a market in a mania like this, and you're trying to be long here, saying that, oh, listen, why shouldn't I be long? I mean, this market has only one way to move. In essence, in retrospect, you are looking back and you're realizing that you were collecting the last few pennies in front of the upcoming train, right? That just,
before the barrel went over Niagara Falls. And
yeah,
I think that all central planners and governments need to put Prozac in the drinking water, because the whole world is bipolar right now.
Indeed, and this is also this is also a proof that the markets we've recently had are absolutely unhealthy, and the market price, the market price action that we've had is unnatural in a sense, because we've created a market environment that stocks are being bid 99 out of 100 days, and 1 out of 100 days the floor collapses, and you're seeing price action that resembles a situation of war, for example. So this is not normal. You are supposed to be having binary price action and not bipolar price action, as you very well mentioned, Dale, right? Anyhow,
I agree with you for what it's worth, Steve.
It's worth a lot, you know that.
Yeah.
Anyhow, just to have a look, to go from the general conversation to a more specific, like having a look at a few levels, etc. Now, before we wrap it up in indices, I have to say that once again, the Dow Jones is testing. It acted as support the previous 2 times, yesterday and the day before. Sorry, the day before yesterday and the day before that. This ascending, the red ascending channel. Okay, we are currently trading below it, but we closed below it yesterday, but it was for a little, for just a few handles, and you never know what's going to happen today. So, but if we do break below it, I think that the next area you should be looking for support is the 23,300 area. Okay, if that fails, then we're looking for a retest of the 200 DMA, which is at 22,760. Obviously, obviously, if you are to remain bearish and are looking for more downside from here, you do not want yesterday's high to be exceeded so soon, right? So, you know, if you want to be trading to the short side, I think that 25,300 roughly should be the line in the sand for you. Now, having to do with the Nasdaq, the Nasdaq has also retraced fully the ascending wedge that we had. It was in essence the last hurrah of the market, breaking above another ascending channel. But this was a textbook ascending wedge. We had shown it before it even broke. Same with the Dow Jones. And if the next area of support is at 6,120 something, because you also get the 200 EMA coming to that area. It was also a breakout level from there, from another ascending wedge. So if we break below that and the 200 daily moving average, I think that you know, the situation becomes a lot more serious, and then we're talking about a much larger move to the downside. So as you see, the 200 DMA, once again, it plays a role here in the SPX. We tested it, actually. That's where we rebounded from. It's slowly converging with the 2,560 area of support that we had here. We broke above it, we retested the support, and then we accelerated higher in the middle of November. And keep in mind that if we break below there, also the situation becomes a lot, you know, a lot harder to assess for the SPX. So I really think that you know, within the next few days, we're going to get a better idea of if this is a limited time sell-off, and then a period of consolidation is going to follow. Because, as I said, I consider it impossible for indices to reclaim their highs within a few days. At the very best, it's going to be like a month process or a 2-month process or whatever. And during that period, we're going to be having you know, moves both to the upside and to the downside. In essence, you will be able to make money trading the market both ways, which is something that we haven't had in a long period of time, right? But if we fail through these levels, I think that you know, the market sell-off can actually you know, take a much larger snowball effect, kind of get us in a situation like that, and then you cannot really make predictions of where it can stop. For the time being, though, we would better respect the larger trend and take this as a corrective move lower, so not get our expectations you know, too high for this. Okay, we've already seen a very, oh, by the way, Dale, just have a look at the USDCAD. It's already shooting star on the daily, yeah?
That's really crazy. I don't understand that. I mean, the data was really not good. So
that's why Stelio, although I started with a background of economics, after some point I realized that by following data and not purely price action and technicals was actually losing me profits in the markets instead of making me profits in the markets. You know what I mean?
Especially
well, you know, guys, you know, I'm a believer in this. I know there are a lot of successful news traders, but one of my favorite expressions for fading news is people who buy headlines today sell newspapers tomorrow.
Yeah, that's a very good one. You know something? I said since last Friday that for me, a confirmation of a break above there is 126.60, and you know, that's going to be a major resistance. And as you see, this is exactly what happened. If I let myself being carried away by the news and not simply stick to the levels I already had on my chart,
yeah, you will be carried away.
Yeah, yeah. Yeah, but you see, for example, if we close negative today, that's going to be a major rejection, and I don't care how employment ended up being in Canada. I really don't care, and you know why I don't care. I mean, somebody would say, why isn't what an economy doing important? Absolutely, it is, but isn't everything embedded in the price? Isn't the price supposed to be depicting anyhow whatever is important for this market? Plus, keep in mind that a lot of macroeconomic data simply manifest a lot later than you actually get to know about them. For example, Trump wants to go through more spending now and financial expansion. Στέλιο, δημοσιονομική. My mind is.
Say that again.
I had a break. Δημοσιονομική επέκταση.
Now I'm okay, moving on.
Yeah, or whatever. So he wants to spend money in the U.S. economy, which theoretically speaking.
Oh yeah, Steve, you're talking about a big infrastructure.
Yeah, infrastructure spending. That's not the word I was looking, but it's due to infrastructure spending, correct? So theoretically speaking, that should be very positive for the U.S. economy. But how is he going to do that? He's going to do that, in essence, by increasing debt, correct? So a short-term reaction to that, you'll see, can easily end up being a stronger dollar, stronger economy, whatever. In the medium to long term, though, is that going to help the U.S. economy? Absolutely not. Because by going through more spending to stimulate an economy that's already in a mature business cycle, is going to have small benefits in the short term and large debt.
More debt and higher rates.
Exactly, in the longer term. So this is a macro fact that although theoretically speaking is dollar negative, it can easily prove dollar positive in the short to medium term, right? So how are you going to trade this as a piece of news, being short or long? You know what I mean? That's why we have technicals, right? Because technicals will tell us when the time will come that the market will stop seeing this as a short-term positive and will start seeing this as a long-term negative. So the market will determine when the transition between the short to medium-term effects and the long-term effects is upon us, correct?
Yes. And Forex gal, David Stockman's been bearish the market for 2 years. So yeah, now maybe he's right. But if if you took his advice, you missed the move, or worse yet, you were short. And now he's going to say, "I told you so."
Probably, if you were short for the past 2 years, you don't have an account to be short anymore and make money, right?
No, that's another great expression. Manias first break the people who bet against them, and then the people who bet on.
Yeah, absolutely.
I got like Jimmy Durante. I got 1 million of them.
I know. Undoubtedly. By the way, I think I got quite lucky. I closed my Aussie today quite a lot lower, actually. I think it was 77.80 little. I wrote it on the chat room as well. I know that my target was 77.40. 77.40, but I was seeing in the short term that we're seeing, some exhaustion. So I took profits. It was, if I remember right, 3.19% profit to my short, and so I have no exposure anymore in the Aussie. I have to tell you though that since in the medium to long term I remain bearish, I'm more than willing to re-short Aussie again if we come up to this 79 zone and I see a reaction from there. So I'm out of my whole position. I took half of it out there and the rest today. But I will be looking for short opportunities once again. So the only position I now maintain is half of my gold short, and everything else I've booked this week. This has been a very good month. Last month I was striving to stay in my short positions, and I barely made it, by reducing, adding, etc. But this month has been, amazing. So I can't complain. By the way, look at USDCAD. It's moving even lower from there. Anyhow, let's have a look. We have several questions. Let's have a look at them.
That was a great short call up there, and definitely a great idea to take profits up there. How can there be a better room on the net than this? I don't think it's possible. Really, Live call.
Our friend Abdul, by the way, thank you, Dale. We're really honored for your kind words. Abdul, by the way, says that he is, let me see, did you say you're long? I'm long pound CAD. Okay. Let's see what you're seeing here. So, first of all, pound CAD. I was viewing this as a triangle. It can easily still be a triangle. In which case, I think a break higher is a very, very likely scenario, right? Because triangles are usually continuation formations, and there is absolutely no doubt that we came here from a move to the upside. So if this ends up being a triangle, it's a good one to be long. On the other hand, if we break below 173.50, you should be careful because, and I've said that plenty of times, you can never be 100% sure of the nature of a corrective move until it's complete. So for example, it now looks like a triangle. It might end up being like a bull flag, right? So in which case it might end up being something like, let's say this. Okay, so we might move lower from here first. Okay, definitely though, the fact that we got rejected after briefly pushing to new highs yesterday is a little bit worrying, I have to say. As I've said for both the EURUSD and the pound CAD, personally, Abdul, from a personal perspective, by the way, if you notice, we also have RSI divergence here because we did register a new high intraday, but the RSI on the daily is definitely diverging. What I also said is the following: EURUSD and pound CAD, although they do look bullish in the sense that they've kept on making higher lows, which obviously, at least in the short to medium term, proves that we are in an uptrend for the moment. I don't like the momentum. You know what I mean? Just look at this. I don't like it. I mean, because I always like to view a move from the, starting from a long-term chart. I don't like the fact that if you zoom out, more or less, we have been in a choppy, large range. More or less the same applies to EURUSD. So, although if I had to be something, it would be long, so I would be with you. I'm not looking to trade these markets, as I said. Anyhow, I gave you the levels and what to look for. I wish you the best of luck here. Let's see. He's on the top of long time daily channel. I just wanted to share my view. Thanks, Said. If you wanna post a chart, I will be more than happy to show it, mate. By the way, let's have a look at the DAX, because our friend, who was it? Look at it. Nick asked for it. Yeah, our friend Nick asked for it. So let's have a look at the DAX.
S&P is recovering.
Yeah, no surprise there. By the way, we spoke here the day before yesterday, and I had said the following things. First of all, I said DAX is on a resistance because it's retesting the broken, expanding megaphone formation, expanding triangle. You can call it what you want. It's the same thing. So I said that, listen, there are three possibilities. One, we get rejected from here. Second, we move a little bit higher to the 200 DMA and we get rejected from there. Third one, we get all the way up to 12,900, which has been support, resistance, and then support, and can act as resistance. And then we move lower to this support area. So we failed to even break the first resistance area indicated, which was the retest of the expanding triangles support as resistance, and we plunged directly to the zone we said. Now what happens from here? For the time being, we seem to be finding support, which makes sense because this is a demand supply zone. So we might get a bounce from here. If we fail this area as well, keep in mind that the next one is at 11,800. Now any rebound from here, obviously, as long as it doesn't exceed the previous high. So for example, retest that expanding triangle again, move lower. You know, in this case, as I've said, now this has become again a binary market. So, you know, look to be buying into support, being very cautious because the last move has been brutal, and selling into resistance I think it can be a good strategy for the time being, as long as volatility remains rather elevated. I think that selling resistance areas is the way to go until proven otherwise. Okay, so that's what I see about the DAX. Okay, Dale, it's 4 o'clock. Do we have a guest today? 4 o'clock my time.
We were supposed to. I've been trying to get hold of Kiana on Twitter, and she hasn't responded. So my guess would be something happened.
Okay,
she's going to have a baby in a few weeks. So you know what it's like. You guys are fathers. You know what it's like. Sometimes you don't feel well. So
absolutely,
that might have happened. So
I'll reschedule. Said has this this channel. Okay, let's not call it a channel because I don't like so much these violations here, but definitely this trend line that you're showing here, Said, the upper trend line, is definitely a worthwhile trend line because it's what I called an internal trend line. I mean, it has acted as support here. It's acting as resistance there. So yeah, thank you. This is an interesting trend line, and as you saw here, we have currently been retesting it. So yeah, there you go. There is another area of resistance there, the one that Said is showing us at the moment. Thank you, mate. Thank you. This is an interesting trend line.
Lot of talent in the house.
Yep. Okay, so do we have any more questions, or we wrap it up for the weekend? I'll see you all in the chat room and etc. Do we have anything else?
Okay, it looks like a wrap, Steve.
Okay, thank you all. This has been a very interesting week. As I said, don't expect that volatility both in stocks and FX is going to like vanish within a day. There's no chance, which means that we have more interesting days ahead of us. And as you see, we're keeping you up to date with patterns in play, in the chat room, with updates, and those of you that are not members of ForexAnalytix, once per day here. Okay, thank you very much.
All right, Steve, Stell, have a great weekend. Everyone have a great weekend.
You, Dale.
Thank you very much, and thank you everyone for your attention all week. It's our mission here at ForexAnalytix to build up and edify traders every day. Give me a Y if you think we accomplished our mission this week. Okay. Good to know. Good to know. I celebrate your success as much or more than mine. So I really get a lot of gratification in seeing other people succeed. So with that being said, congratulations. If you had a great week, if you didn't, you learned something this week, and invest in your future performance by becoming part of our FX family here at ForexAnalytix. And above all, don't just count your pips, count your blessings. Everyone have a great weekend. Enjoy the Olympics. Hopefully Kim Jong-un doesn't send any fireworks over the Olympics while it's going on. And we'll see you all on Monday. Looking forward to trading these very exciting markets. It's I'm so happy that we have more volatility in the markets now, and we'll be there to help keep you out of trouble and point your eye in a direction that could be compelling enough for you to assume risk. Adios, everyone. Have a great weekend.